The next few minutes, we'll get you a couple of managements. One is with regard to Persistent Systems, and later on in the show, we'll get you the management of Raj Ratan Buyers. Mangalam joins us as well on Chartbusters. Hey, Mangalam.
Hi, Nigel. Let's talk about Persistent Systems itself. It was the stock on the way down in yesterday's trading session, and that's largely because despite good numbers, the management commentary with regards to margins wasn't pretty good. In fact, the stock was lower yesterday, and it had seen a big run-up before the numbers already. So what is it that the management has to say with regards to the future going forward? Reema, our colleague, spoke to the company's CEO, Sandeep Kalra, began by asking him about the same, the margins. Let's listen in to that conversation.
The context of margins is in the context of a bigger picture. So if you look at the overall revenue growth that Persistent has had over the last 4 years, in the last 4 years, we have had a pretty good relative outperformance from a revenue perspective. If I was to give you statistics, the last 4 years, the industry has grown by 1.6%, 18.6%, 10%, and 2.7% year on year. Compared to that, Persistent has grown 12.9%, 35%, 35%, and 14.5% for the last 4 years. Now, if you look at the bigger picture macro, the macro continues to be tough. So all we are trying to say is we want to continue to be a relative outperformance company, keeping the margin at the same level or better. But if it is a question of growth versus margins, growth at the same margins is the priority. And if we can deliver better, we would rather under-promise, over-deliver rather than over-promise, under-deliver.
Okay, so growth at same margins is a priority if it comes to a situation where if there is a trade-off between revenues and growth and margins. So this 200 to 300 basis points of margin expansion, when can you achieve it? 3 years hence, starting now?
We are keeping that goalpost the same. So if you look at it from our perspective, what has to be done to grow consistently in a macro that is good or bad? So you need to have strong capabilities. You need to have strong customer relationships, the ability to mine existing customers and to acquire newer customers. All of this, when the macro is bad and the things are changing, so the technology landscape is changing, we need to invest in capabilities like generative AI, and we need to be ahead of the curve. That's what Persistent has always been known for, and that's what our endeavor is. We are not a price leader. We are a competitive leader with respect to capabilities and so on. So we are investing in the capabilities, not just to achieve our near-term goal of $2 billion in the next 3 years, but lay the foundation for a much bigger company to come based on the competitive differentiation on an ongoing basis. And as the market improves, this should definitely give us a much more leverage. And obviously, with that, the margins will definitely expand. So the goalpost remains the same. Next 3 years, aspiration of growth and margin expansion, both remain the same.
Okay, so in the next 3 years, revenue should double to, hit $2 billion and margin should expand by 200 to 300 basis points. This generative AI investments, you want to invest in capabilities. Have you put a number to it?
So if you look at it from a revenue perspective, it is too early to say. From a revenue perspective, while it is maybe in lower double-digit numbers from a run rate perspective, but it is going to go like a hockey curve. It is not just about generative AI. Generative AI will have a downstream impact on many projects, which are data-related projects, cloud-related projects, and so on and so forth. But the tip of the spear remains generative AI. So we need to make sure that we are having good partnerships, whether it is the Microsoft, AWS, Google, IBM, Salesforce, and are building capabilities in these and niche players that are emerging big time. Also investing in platforms that we are building that will differentiate ourselves in the thing. So overall, I don't want to put a number on the investment in this, but most of the forward-looking companies will have to invest in this.
Okay. And is there a number on the generative AI pipeline like your peer TCS did?
It is too early to say all of this. And I would say anyone who says generative AI pipeline, that is just tip of the iceberg. The bigger pipeline is not just generative AI, it is AI-led projects, the cloud-led projects, and overall transformation projects that will get spawned. And if you look at Persistent, most of our work is forward-looking, build and then maintenance of the same as we go along. And that has held us in very good stead. The relative outperformance that I talked about, we have doubled the company in the last 4 years. That is all based on this.
So since you are aiming for industry-leading growth in FY25 also, can you tell us if FY25 will be better than FY24?
Reema, we don't give forward-looking guidance. But if our track record is any outperformance-related thing, we have done significant outperformance. Our pipeline is good. We have done good order books. So relative to the market, relative to where our peers will land, I'm pretty reasonably confident we'll have a very healthy outperformance.
Okay, but relative to your own performance in FY24?
let the time pan out, and the aspiration is there. If we are saying 3 years, $2 billion, you can do the CAGR.
Okay. This planned ramp down of one of the projects of your top client, will it continue and hurt growth in the subsequent quarters? If yes, how much?
So look, again, we don't give forward-looking guidance. All we can say is we have delivered 14.5% for the year, including this planned ramp down. We have delivered 3.4% quarter on quarter, including this planned ramp down. So we have a good business plan. We have an eye on the ball on various customer categories, and some customers will go up, some will go down. But as long as we deliver healthy quarter on quarter, healthy year on year growth, that is where the company is headed.
Okay. And just in the near term, how is Q1? Since you've said that the macro environment hasn't changed much, it's similar to what it was and it continues to remain tough. How will Q1 be relative to Q4? Similar, or because Q1 is typically seasonally stronger, we should expect Q1 growth to be better than Q4?
Again, no forward-looking guidances, but look at our trajectory, look at the order wins, they're healthy, should convert.
And when do you expect BFSI? You've said healthcare will lead growth for the company in FY25, while BFSI will remain a bit subdued in high tech. When do you expect BFSI and high tech to turn around? What is the own internal assessment?
So if you look at the last quarter gone by, barring the top one customer, high tech grew by about 1.6%, BFSI grew by 1.8% quarter on quarter. And so it is not bad growth relative to those segments for our peers, because obviously we live in a marketplace. And the market demand environment also decides how we grow. So for the near foreseeable future, while we have said healthcare is the biggest thing, there are different teams focused within Persistent on different segments. We'll let the time pan out. We are relatively confident of performance, which is more secular across segments.
Well, that's the management of Persistent Systems, putting it very simply that they rather promise and over deliver. For the time being, though, the stock yesterday was down closer on 10%, despite a good showing. The street is cautious on the guidance given. And today it was up closer on 2%, but from the top, stock is still a little bit nervous, has corrected.